Welcome to Nexgen Software Services. We look forward to helping you make a lot of money using our Fibonacci software. Initially, we're going to start you off in a simulator, and we're going to teach you the rules, and we're going to teach you how to be very consistent. Only through consistency will you be able to take a small amount of money and turn it into a large amount of money. When you open Nexgen's charts, the first thing that will jump out to you if you're familiar with trading is that our charts are not minute-based. This is an example of a crude oil chart that's a 5-minute chart. So that means there's one bar for every 5 minutes. In the following chart, you're going to see our Nexgen dynamic Renko bar. And what this bar will do is it will smooth out the data, and it will allow you to have a much easier read of the market, much more consistency in the rules, and really give you a very easy use of our Fibonacci areas. Many new traders get fixated on trying to line up their time-based charts with a range-based chart. Don't do it. It doesn't line up. Every time you see a new bar, it means that a certain amount of range has happened. So if the market's moving very quickly, you may get one bar every 30 seconds. And if the market is moving very slowly, you may get one bar every 5 minutes. Now, the first indicator that we're going to look at is our T3 trigger lines. It's a linear regression moving average, and you're going to see when the faster moving averages are above or below the slower moving averages, it's going to paint the background. So for example, here the market will be going down because the faster, slower, small triggers are below the large triggers. So we call them small and large instead of fast and slow. And then you'll see that the small triggers get above the large triggers, and it makes the background color green, and the market goes up. And then the small triggers get below the large triggers, and the background color turns red, and then the market goes down. This is going to be very useful for you when trading with the trend. You're going to be taking short trades when the market background color is red. You're going to be taking long trades when the background color is green. The next indicator you're going to see plotted on the charts are the negative numbers with lines coming off to the right. These are what we call T3 divergences. And it's divergences in retracement values between the price bars themselves and a MACD calculation, which we don't show you here. It's automated inside of this indicator. And divergence for us is going to create support and resistance, and that's why we draw the lines from the top or bottom. And it's also going to give us a read as to the overall strength of the market. So when we have divergence on the low or the high, we know that the market may continue moving a little more in that direction, which you will see in your upcoming tops and bottoms video. Finally, we're going to bring it all together. And you'll see the red and blue lines that have been added to the chart. This is Nexgen's T3 Fibs Pro Trader automated Fibonacci indicator. Fibonacci will serve as our main support and resistance areas that we're going to be either trading to or from. So we're going to either use them as profit targets, or we're going to use them as good tops and bottoms, which you'll see in our tops and bottoms video. And what I want to do now is I want to take a close-up look of part of the chart, and we'll explain each of the indicators that are on the chart and a brief overview on how you actually use them during your day-to-day trading. So the first thing you're going to notice is the divergence that we talked about earlier, represented by the negative 37 on the chart. You're then going to work your way forward to the chart, and you'll recognize that the background color is red because our trigger lines are going down. And then you're going to see our red Fibonacci resistance area with a red background. And this is a good time to give you the description of the moving average that runs through your charts. It's a 55-period exponential moving average, and you'll hear it referred to as the midband. And you'll see in this short scenario here, if you were trading the market, and this is what you'll be doing on a day-to-day basis as we go through class and you learn the rules, when the market is going down, you'll sell a pullback to resistance, and you'll wait until the market gets down to a profit target or Fibonacci support or a reason to manage the trade, which we'll get to in the management video. And that's it. If the market's going down, you'll sell resistance and you'll get out at support. Which brings us to these yellow dots and the magenta dots that are in your chart. These are called one-to-ones. and they're Fibonacci-based alternates. And what that means is, let me show you another picture. It plots yellow dots where there is swing size similarity. So when the swing from A to B is put in, the indicator will wait for the low and then project out 100% of the original range. So all you have to know, and the only way we're going to use them, as a support or resistance area. And when we have multiple Fibonacci support or resistances in the same spot, such as a blue Fibonacci support and a yellow 1-to-1 dots, it usually means that there's a good bottom. And when there's a good bottom at Fibonacci support, we're going to wait for our indicators to roll over, the trigger lines to roll over, and then we're going to look to buy pullbacks to get long with the new market direction with the green background. So let's take a look at this spot right here. Notice blue Fibonacci support holds, then our trigger lines roll, and we're going to be using these pullbacks or tails on the dynamic Renko bar market to buy, which not on this chart. You'll be using a second chart to fine-tune your entries, which you will also see as you start to learn our rules. And we'll buy pullbacks and we'll trade the market to the long side until we reach Fibonacci resistance or some type of condition that stops the market. This is also a really good illustration that not all support and resistance is going to hold. So you'll see we had red Fibonacci resistance, but it turned into a blue Fibonacci support. Typically, when the market is very strong, as represented by strong trigger lines, the market has a tendency to break through Fibonacci resistance, turning it into support and continuing up to the next level of Fibonacci resistance, which it did here. Which brings us to the top of the chart. And from the top of the chart, you'll start to see where all of our indicators come together at the exact same time. You'll see we have red Fibonacci resistance. We have yellow 1-to-1 dots. We also have divergence as represented by the negative 83% at the top. And after that, you'll notice that our trigger lines have crossed down in a very strong manner. And this is what you'll learn in our tops and bottoms video as a really good top. And when we get a really good top, what we're going to be looking for is the same thing now in reverse. We're going to sell pullbacks on our price bars and start taking short positions again until we get to the next Fibonacci support, at which time we will analyze our trigger lines. And again, you can see our trigger lines are very strong, so the market continued beyond support, turning the blue Fibonacci support into a red Fibonacci resistance. Notice that the market pulled back to that Fibonacci resistance to continue the trend until we reached, again, Fibonacci support and a yellow 1-to-1 dot. This is the point where you would take your profit and you would start looking for another trade after the trigger lines rolled to the upside, or the market broke the blue Fibonacci supports and turned them into red Fibonacci resistances. So you'll see it's a very simple, clean roadmap that the market lays out for us at our Fibonacci areas. We're going to trade short to support. We're going to trade long to resistance. We're going to do it with the strength of the trigger lines and the background colors on our charts, following the rules that you will learn in the upcoming sections. We appreciate you being here with Nexgen Software Services. We really look forward to showing you how to make money on a day-to-day basis with our software.